Did Twitter contribute to the panic over the stability of the U.S. banking system? That's the question raised by a thought-provoking Wall Street Journal piece titled "Social Media Postings Amplify Anxiety Over SVB Collapse." The circumstantial evidence is striking.
You should be absolutely terrified right now,
tweeted startup investor Jason Calacanis.
Run on the bank,
was the cry from internet personality Kim.com, while famed investor Bill Ackman tweeted,
absent a system-wide FDIC deposit guarantee, more bank runs begin Monday morning.
No losses will be borne by the taxpayers.
Especially intriguing was the speed of the government's questionable decision to cover all depositors at Silicon Valley Bank and Signature Bank, a decision that was amplified by Joe Biden Monday before the markets had even opened.
All customers who had deposits in these banks can rest assured they'll be protected and they'll have access to their money as of today.
The Republican chairman of the House Financial Services Committee, Representative Patrick McHenry, called it the first Twitter-fueled bank run. But it might be more fitting to call it the first Twitter-fueled Treasury run.
They were very conservative as a bank. This is an issue where people panicked.
In 2011, Facebook CEO Mark Zuckerberg reflected on the future of Facebook.
The last 5 years of Facebook have really just been about helping people get signed up and stay connected with their friends. But I think the next 5 or 10 years are going to be about all of these different products and industries that can be rethought.
One such product was Twitter, a media platform where you could instantly share your opinions with the whole world, with the value of those opinions measured by retweets and followers. Arguably, social media merely democratized the opinion game. That, anyway, was the early promise behind platforms like Twitter, Facebook, and YouTube, which caved beneath the weight of their neurotically politicized labor forces to cleanse the new forums of conservative opinion.
What we found in the files was a sweeping effort to reverse that promise and use machine learning and other tools to turn the internet into an instrument of censorship and social control. Unfortunately, our own government appears to be playing a lead role.
What intrigues me about the SVB panic is that the U.S. Treasury, Federal Reserve, and Federal Deposit Insurance Corporation could have been spooked into a premature all-depositor bailout by the possibility that a social media panic could collapse confidence in the banking system over a weekend.
Now, of course, we need to conduct a full post-mortem to figure out everything that went wrong.
So-called digital natives refer to successful social posts as having gone viral. That phrase once described something dangerous, like a virus or pathogen, but now it's desirable.
In the end, what I care about is policy more than party. And, what I care about the most is what policy practices people are going to have for the world going forward, what example they're going to be setting on a global stage.
There are some solutions to social media's destructive force. The Sam Bankman-Fried debacle with FTX has revived the concept of due diligence.
The underlying causes was basic fiscal and monetary policy errors.
Meanwhile, the SVB saga, a decade of euphoric zero-interest rate investing topped off with an overnight federal bailout, should renew the notion of moral hazard. That's two protective solutions self-explained in 2 words. Even by Twitter standards, that's efficient.